Bitcoin is money, and people oftentimes will think of money as just a medium of exchange, just what you use to satisfy the coincidence of wants so that you're not directly bartering good to good, but you have this intermediary good that is money, and you can exchange that for a good or service. That's what people think money is. But money also serves the purpose of a store of value or savings, right? If you have money in your bank account, it's serving a purpose just sitting in your bank account for you. It's savings. It's something to use when you need it. That is a purpose that is useful. It is not only when you use it as a medium of exchange. And right now people will say, well, you can't use Bitcoin as a medium of exchange. My local grocer doesn't accept it, so it's not money. If you can exchange it for a different type of money that is being used more as a medium of exchange in its current iteration, then it's one step away, and it's almost as good as using it as a medium of exchange because of how liquid the market is, and you can exchange it for US dollars, go use those US dollars as a medium of exchange. We will get rid of that friction, of that unnecessary step, and use Bitcoin as a medium of exchange eventually. But right now, it's more so serving the purpose of the other use case of money, which is savings, a store of value. So I think that is the best way to enter a position. That is the best way for you to make it. Because in the end, when Bitcoin is worth $1 million, $10 million, right? Of course, those dollars are not going to be worth what they're worth today. But at that point, it's not going to matter if you buy Bitcoin at 110,000 US dollars or $90,000. It's really not going to matter at that point. It's going to just be, did I stack as much as I possibly could? Did I buy with whatever savings I had, with whatever extra cash I did not need? Did I put that into Bitcoin for long-term storage? So the first mistake is thinking that you can time the bottom. The second mistake is thinking that you can time the top. A lot of people will either pretend they can time the top, or potentially they have timed the top and believe they can do it over and over, and they will make a mistake at a certain point, which will make them lose out on holding Bitcoin. The last thing that you want to do is not hold Bitcoin into the future. Every time you sell Bitcoin thinking that it's a top, you are no longer holding Bitcoin. You have less Bitcoin than you had prior to selling it. Obviously, that makes sense because you bought something else with it, probably US dollars, and you have less Bitcoin. Now, the idea with that is you're waiting for the price to go down. You can buy more Bitcoin. You can have more Bitcoin than you had before. It is possible, and that possibility gives false hope to the average individual that they can do that too. You will be eaten. You are the fish at the table. You are not the fish eating the smaller fish, the vast majority of you. So it's not worth even instilling the hope that you can time the markets, because most likely you can't. And most likely you will end up with less Bitcoin over time. The way Bitcoin historically moves is it trades sideways and down, and then it stair steps upwards really drastically. And you have to be holding it at some point during that sideways and down to experience the purchasing power increase when it stair steps upwards. You cannot buy it the day before it happens, or the likelihood of that is sub 1% that you're going to time it that correctly. You know, you might buy, if you buy every day, you're going to buy the day beforehand, but not in size, obviously, because you've set up a dollar cost average. So there's really no point to doing that. There